Hello everyone, welcome back to my channel. I'm Caitlin McKegg, a Phoenix real estate broker, and every Monday I come here to give a market update on what's going on in the Phoenix housing market. Thanks for joining me. If you're new here, hit the subscribe button and the bell to make sure you don't miss out on future videos. I also post videos about living in Phoenix and other real estate topics as well. So thanks for being here. I'm going to start talking today about the economy overall, as I've been touching on that over the past few weeks. And then, of course, we'll drill down into what's going on in Phoenix real estate. So this past week, we got the jobs report back, the numbers, and the data released on Friday showed that the U.S. created a greater than expected 372,000 new jobs in June. The prediction was about 250,000. So that is a really strong jobs report, which doesn't really jive with where we're headed as we talk about recession, as we talk about the federal funds rate increasing and what the Fed's trying to do to beat inflation. We were expecting this report to be a little bit softer. So what happened with that, this goes on to talk about it. It pushed Treasury yields higher, left the yield curve inverted as traders factored in the need for the Federal Reserve to keep raising borrowing costs in its campaign to suppress inflation. So long story short, I think we're just going to continue on this path of the Fed raising rates. We're going to get the CPI information this week, some updated inflation numbers, and then I believe it's the following week or the week after that that the Fed will meet and announce their next move. Everyone's saying 75 basis points. Again, keep in mind that doesn't directly affect mortgage interest rates. So just because they raise that, that is not what happens to mortgage interest rates. However, it will be affected. The more we can't get inflation under control, the higher interest rates are going to climb for everything, pretty much. So this next article that I have right here, home ownership just got 5% cheaper as mortgage rates fall off a cliff. I wanted to address this, some good and some bad in here. It is very hard to stay up with where mortgage rates are on a daily basis. So this article comes out on July 7th, and talking about last week. Well, all of that can change within hours, honestly. And I'm not a mortgage lender, so I'm not here to report rates specifically, but I do like to share these headlines for the pure fact for you to understand how much mortgage rates affect your monthly payment and affordability as a buyer. So this is talking about that you could save about $100 on a typical monthly mortgage payment based off of the changes that they saw in mortgage rates. And where we ended as of last week, 30-year fixed mortgage rate fell to 5.3% this week, down from 5.7% a week ago. And then a year ago, we were at 2.9%. So again, it's the same message where these rates are continuing to climb or kind of hovering around this area that's close to 6%, which is so different than what we've seen over the last 2 years, around 3%. So obviously, as a buyer, your payment increases significantly. Couple that with our high home prices, you just have a very unaffordable situation going on, which is why we're starting to see a lot of softening in the market. And I'm going to talk about that in just a minute here. Let's move on to another topic of mortgage rates. And this is something that I wanted to bring up. This is mortgage rates and what happens to them as we are in recessions. And as that talk is on the horizon, and we more than likely will be in a recession if we're not already, this is good news for mortgage rates in the future. So as a buyer, keep in mind, you're not marrying that mortgage rate that you get today. You can refinance when rates go back down. That said, make sure you can afford what you're buying today. I'm not saying I'm not saying to take a risk on that, but just keep in mind it's not something that you're stuck with forever. And more than likely, if we do get into a recession in the coming months or a year or so, rates will end up going down. And historically, this is what happens. 1980, they were at 16%. Ouch, went down to 11.8%. 18 to 13, 11 to 8, 7 to 6, 6 to 4, and then most recently in 2020, 3.8 to 2.8. So rates always come down in recession. So just keep that in mind as the Fed continues to fight inflation and is increasing all of these rates. It will send us into a recession, again, if we're not already, because it is such a strong move at the moment. And we will likely start to see a decrease in these rates again. Now, will that spur a ton of buyer activity? Will we have the inventory on the market to be able to absorb that? That's a whole nother question, and I don't really feel like predicting the real estate market that far in advance, but those are things to keep in mind of what may change. Now, moving on to Phoenix specifically, this is really interesting. So this is from the Cromford report. If you're new here, a lot of this information is from the Cromford report. I'm a subscriber, and they provide awesome data for realtors to share with their clients. And in the past, I've talked about a contract ratio, which is another measure that the Cromford report uses to see how our market is doing. And their contract ratio, I'm just gonna write over this right here. So 30 to 60 is basically considered a balanced market. Anything under 30, you're in a cold market. And for reference, you can see where we were. This column here is showing us back in April, and then where we're at today, and the percent change between the two. You know, you can see a lot of high numbers in here, 500s, 188, remember over 60, you know, you're in pretty much a very hot, frenzied, especially at 509 market. We're no longer there. So here is the percent change, and what this chart is showing is the cities that have had the most change in the health of their market, from going from a hot market to a balanced market or even a cold market from April until today. So Paradise Valley has had the least amount of change at 49%, which is you know, still a lot of change, but it's the least amount. If we come all the way down here to Anthem, they've seen the most amount of change at 86%. And all of these others around here, oh, we got one more. This is just a little bit big, or yeah, a pretty long, I knew there was one more down there. So Sun Lakes actually has seen the most at 87%. And then Anthem right behind it at 86%. These two cities are just above 30, which means that they are really close to moving into a buyer's market. They're the closest there. Once they get under 30, it's going to be a cold market and basically a buyer's market. So I found this interesting. You can look at your city on here and see where you were at back in April, where you stand today, and how you rank amongst all 29 of these cities for the strength of your market. 19 out of these 29 cities are now in a balanced market. They have a reading below 60. So that hasn't been the case pretty much ever for a very long time. But 19 of 29, that's a pretty good chunk of these major cities that we're seeing in balance. And now really the next question is, are we going to a buyer's market? So we will see. Moving on, let's talk about the Cromford Market Index. If you're new here, this is another measure that the Cromford report uses. It's a little bit more complicated than that contract ratio. And the contract ratio is really looking at the number of homes that are active on the market as compared to the homes that are under contract. For the market index, which I'm about to get into, this measure is looking at supply and demand. So they're measuring how many homes are on the market and what is that absorption rate for how many homes are going under contract, what is the buyer demand like, and they can look at both supply and demand separately and put them together to create this index. And essentially, a number between 90 to 110 is a balanced market, and anything over 110 is a seller's market. Anything under 90 is a buyer's market. So this here is our numbers here that I was just talking about. So, you know, get the under 60 out of your mind, 30 to 60 that I was just talking about. This is a whole different way of looking at it, and hopefully it's not confusing you. But, you know, what we're looking for here is anything close to 110 or below. Those are balanced markets and headed towards buyer's markets. So we can see here Queen Creek and Buckeye, both of which are in a balanced market. And Buckeye is at 100. They're predicting that Buckeye is going to be in a buyer's market probably by next week. So that remains to be seen. We'll have to check back on that one. But here is some interesting change. Okay, so I've been saying, you know, a lot of this is because of all the inventory that's been coming on the market. And there's got to be a place where that stops, where people decide not to sell their home because they don't need to. They have a great interest rate. Maybe they're cash flowing on a rental property. There's got to be a stopping point. And this week is the first week we've seen only a 34% change on average on this market index reading, as compared to the previous week was a 35% change. So it's small. It's very slight. It may not be a trend, but maybe it is. We'll have to see. It's the first week we have not seen a greater change towards a balanced market in the Cromford Market Index on average. Also wanted to point out Glendale. Glendale this week has had the biggest change at 43%, more than any of the other cities. Last month it was at 281, and this month it's at 161. So that's a pretty big change just month over month. So we'll see what happens with Glendale. Definitely headed towards balance at this rate quicker than the other cities. So that's where we're at with all those major cities. Let's move on to talking about the Cromford Market Index in general. So this is for the entire Phoenix metro market. We're sitting at 160.9. Again, over 110 is a seller's market. So we're still largely in a seller's market as it relates to the Cromford report, or the market index. But if we look at that contract ratio, that's telling us that we're mainly in a balanced market. And I mentioned this in a past video, but the Cromford report says that the contract ratio is typically leading the data by 2 weeks, just because it reacts very quickly to changes in the market. And it's not it's kind of all over the place. It's very volatile, but it does give us a little bit more accurate data than the market index does, because market index is using averages. They smooth out the data a little bit. So it's not quite as on top of what the market's doing at this very moment. It just lags a little bit. So being at 160, yes, we're still in a seller's market, but we've been trending towards a balanced market very quickly, especially in some of these cities here, heading into a buyer's market already. So our demand index, 86.3. Again, 90 to 110 is a normal range, and 86 is below normal. So we have fallen below normal with our demand by about 3-4 percentage points. And then our supply is 53.6. So that's 53.6 of normal, percent of normal, or you could look at it as being 47% below normal. So our supply is still low, but it's increased quite a bit. Meanwhile, our demand is coming down to meet that supply, and that's putting us closer to a balanced market. Now let's jump down here to the median sales prices. This is the most exciting, or maybe you don't think it's exciting. It's the headline of this update. We have seen almost all the monthly median sales prices below their recent peak. Excuse me. So Avondale is down from 460 to 450 when we look at month over month sales prices. So this isn't list prices. This isn't under contract prices. This is the actual sales prices when we're comparing month over month. Avondale, Buckeye, Chandler, Gilbert, Goodyear, Maricopa, Mesa, Peoria, Phoenix, Queen Creek, Scottsdale, Surprise, and Tempe all have shown a decrease in their sales prices this month as compared to last month. So, you know, there's a lot of talk about prices coming down, and for the longest time, I was saying it just doesn't look like that's where we're headed, because that's really what the data from the Cromford report was telling us. But now, as we look at this, you know, when you measure it month over month, clearly there is a decrease in what these homes are selling for, especially in these cities. If you look at year over year pricing, we're still not seeing a decrease there. We're still selling homes for higher today than we were last July in 2021. So, you know, it depends on how you want to look at the data, whether or not you say prices are coming down. But yeah, if you bought last month, you probably paid more than what you would have paid this month. And same for a seller. If you sold last month, you probably got more than you would have this month. And from everything the Cromford report is saying, we will expect that to continue. So more than likely, if you are thinking of selling, I would encourage you to do it sooner than later if you need to sell, just because your leverage and your opportunity for a higher price is really decreasing day by day. And as a buyer, you know, rates might feel high, but you have a really good opportunity to get in without competition. One thing I want to share with you guys that I've been seeing a lot, just, you know, a little bit of experience from my end being out there in the field right now, I am seeing a lot of seller concessions being requested. So when you list your house for sale, you may get an offer that's full price or close to it, but buyers are asking for a seller concession of anywhere between 2 to 3.5% of the sales price to buy down their interest rate so that they can afford that monthly payment. So that's something to keep in mind. If these prices continue to go down, and then you also know that buyers are getting concessions, that, you know, effectively the net for all of these sellers out there is less and less. So this will be interesting to keep an eye on. If you're thinking of selling your house, just keep that in mind. You may get a full price, but you may be paying those concessions because that just seems to be the new trend for buyers these days. So if you're thinking about buying or selling, I can help you with that. Check the description below. I have a link to get your instant home value. I have a link to search my MLS for homes for sale, and also a link to just set up a time to chat with me about your situation. So feel free to do so. That's all I've got this week, you guys. I hope it was helpful. Let me know if you have any questions. I'll be back next Monday. Thank you so much for being here. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.